Hello, everybody, and welcome back to our Orlando Homeowner Show. I'm Rick Bosley, and this Wednesday at 12:15 today, we're bringing back one of our favorite guests, Taylor Young from Urban Young Insurance, because it's always good to know what's happening in the insurance world because insurance is so pivotal in getting real estate transactions done, especially in the hunger games of real estate that we're in. So Taylor's going to give us an insight as to what changes he is currently facing, and experiencing. Also, we're going to deep dive into the 4-point inspection. Oftentimes it's required by the homeowner's insurance. And then when you do it, what you can look for to see if you will pass or fail or improve. So sit tight. We're with Taylor Young, Urban Young Insurance. Be right back. What's up, man, and welcome back. How are you?
I'm good, man. How are you?
Good to see you. And we've got some hellos, and we've got, Jason points out I got the UCF shirt on for you. So that has been concreted in your brain, Jason's brain, that you're the UCF guy.
Hey, man, it's a personal brand, right? I'll be that guy.
I love it. We'll take it. And Heather, thanks for jumping on here as well. We're live on Facebook, live on YouTube. If you guys have any questions and you're watching live, please put it in the comments. And if it's relevant, we will ask it. If not, we appreciate you watching and participating. Taylor, I started off our little pre-call of going, how you doing? And you said the market is brutal right now. And we just had a conversation last week with Jennifer Cannon talking about the market of how we've never seen a market though like the one we're in. I've been selling real estate for 11 years, she for 20. Tell me how's it feel? How's the energy? How's the culture in the insurance world in terms of this current real estate market?
I had a homeowners insurance company rep call me yesterday, and she said, gosh, this is such a tough time. I said, what, everyone just hates everyone? That's basically to sum it up. You know, you have everyone that's being squeezed on the insurance side, specifically based around homeowners insurance and property insurance, that these companies are not profitable, haven't been profitable, and don't have great outlooks. So from an agent standpoint, it's harder to write a policy than it ever has been, meaning you get a house that has a 12-year-old, 13-year-old shingle roof, and now it's a tough one to get done. It's just, it's fascinating. So every deal is tough, right? So if it used to take 10, 15 minutes to get a customer from A to B, maybe now it takes a few hours and an underwriter that needs to be involved, and you multiply that out over a lot throughout the day. It becomes a painful process. And then on the company side, look, those companies are trying to survive. Agencies are getting squeezed on how much they're paid as far as commission. Their contracts are getting canceled because they're not a profitable agency. So our world is being affected in different ways, but it's all kind of tied together in the economy for Florida real estate. And that's what's fascinating and kind of that I'm trying to be a student of, just like you are.
Well, and we'll talk about that because you just forwarded over an article from a webinar you attended on Florida real estate specifically, or Florida insurance specifically. But, I'm curious because the real estate market is a shortage of inventory. And it's a shortage of inventory because builders are still not been able to catch up from the recession that we had many years ago. It's a shortage of inventory because last month, in the history of data being tracked on the MLS, we sold more homes than any other month in the last 20 years. 4,200 homes in Central Florida. And in the last month, we have fewer homes for sale than in the history of tracking data of 2,800. So we have about 17 days of inventory when a balanced market's 6 months. So we share that. I call it the Hunger Games. And then about 3 weeks ago, man, you threw a curveball at me that said, hey, Rick, I know the market is bananas right now. By the way, we don't like PEX piping anymore either, which talks about it. And so is that just a completely different conversation that our real estate market with inventory and supply and demand, yet yours really has nothing to do with that? It is about insurances and litigation and cost rising. And now, I guess COVID has put some of the smaller companies out of business, so the big ones bought them and inherited their policies. And therefore, they're being a lot more strict with what they want to take on because they've got to mitigate their risk. Is that kind of the game we're talking?
Yeah, I mean, I think COVID it's interesting. I think the timing of COVID's challenging because how the customer's dealing with COVID, right? I mean, finances are tight for some people, most people. For the last year, there's been so much uncertainty in the market and households, and so when you have rising insurance costs and people's mortgages are going up because their insurance is going up, now that brings the COVID into this, right? Because you're like, look, we have all of this going on, but you're telling me my homeowner's insurance is going to be more expensive, that I'm going to have to replace this, and then I'm going to have to spend this money. And that's where the frustration for the consumer comes, rightfully so. That's a frustration for me, rightfully so. But it specifically has to do with these homeowners insurance companies that, have not been able to be profitable in the last couple of years just because they're paying out more in claims, they're paying out more in attorney fees. We've had major storms in the last 5 years, a significant amount of major storms hit Florida. So you have this natural marketplace that's brewing for disaster in the homeowners insurance market. And so, we've been told about this in the last 16, 18 months that this is coming. And it just so happened we started to get an effect the summer of 2020, which is right when COVID hit.
Right. So that was a little bit of coincidence because that's been brewing for the last 5 years. So that's why I call it the Hunger Games, especially the Hunger Games. I think it was part 2 when they keep adding the random elements just for fun. Now we're going to make this portion of it just catch on fire because it's just part of the fun. So whoever's doing this out there, knock it off.
Totally.
Talk to me about that webinar because you mentioned Florida's claims are proportional, but Florida's lawsuits are not. Talk to me about what's going on from litigation and from kind of rewriting policy.
Yeah. The homeowners insurance companies executives across the board believe that legislation needs to change, and that legislation from 10, 12 years ago, whatever it may be, has led us to a point where Florida is an environment that attorneys have the ability to really tee off in some scenarios on a lot of different scenarios. I mean, you can see it when you drive down I-4. You can see it throughout Florida. I mean, it's no secret. For every incident or accident, there is 5 billboards ready to go to work on your behalf. And I believe it's just created an environment to where I was telling you that some of the numbers that came out is that the numbers that I saw that I think it was the Office of Insurance Regulation published, these are public numbers, there's not my numbers, is that Florida represents 8% of total property claims as related to the entire country. And so that's pretty in proportion. Florida's a big state, a lot of property in Florida, a lot of natural disasters. So you say 8% of the entire country comes from Florida, or country comes from Florida. You say, okay, that makes sense. But the number that is alarming is that 76% of the total property lawsuits come within the state of Florida for the entire country. So if you just let that sink in, that's not even close to in proportion. So it's really created an environment where you have attorneys that are just coming to Florida because it's such an environment that allows them to run a very profitable business, to say the least.
So legislation specifically in Florida makes it advantageous for someone to go off, an attorney to go off there and say, you know what, we can sue your insurance company and go get this. 76, when you say let that sink in, that's an insane amount when you think about the rest of the 49 countries or states account for 24%, and we account for 76. What do the other, are we just that Wild West in terms of legislation, and they're just trying to change it so we're on par with everybody else? And do they think once it's changed, then it will balance out? And I guess another question, what specifically will change? Maybe that's a whole different conversation.
Yeah, and I think it is clearly, when you look at that data, you go, well, something's wrong. I mean, if it's 8% of property claims, but even if it was 25% of the country's property lawsuit, you could maybe make a case. But 76%, you say clearly something's wrong from a game standpoint. That game doesn't seem to be fair. So, I think mostly it has to do with attorney multiplier fees. And then also there's no downside to getting an attorney involved, right? There's no penalty. There's no, if the attorney proves that they should pay $1 more, like if the insurance company comes and says, hey, we'll pay you $20,000 for the roof, but the attorney proves, that they should have paid $20,000 in $1, then they now owe all of the attorney's fees for the other side with a potential multiplier on that. And the multiplier seems to be used more common than it should be. So that's one of the things that the Senate 76 bill that we'll probably hit on is going after, is just to say attorney multiplier fees are should be reserved for, you know, gross negligence, or where it truly should be a $70,000 claim, and you're saying that you're going to pay them 20, and you're clearly not doing right by the consumer. But in situations where that gets added on over and over again, it just leads to where you're paying out so much in attorney's fees. There was a number that was thrown around too, Rick, that the amount of attorney fees from property claims, not liability, not right, from property claims in 2019 was close to a hypothetical Cat 3 hurricane hitting the state of Florida, right? And that's
Wow.
not even including a hurricane, right? So it's just giving you a perspective of how much now that attorney fees are being paid out on property claims.
Well, I can speak from experience. Before I was as enlightened as I am now with what was happening, and that was I had a listing and the roof was old. It wasn't old by not eligible for insurance. It was maybe 18, 19 years old. We saw the guy across the street get a brand new roof. So that roofer came over, knocked on the door, spoke with the seller, and said, maybe we can get you a new roof. Lo and behold, hail damage from 4 years ago. But there was significant enough that she got a brand new roof. And when she's sharing that, yeah, I got a $40,000 roof. I'm like, no, you got a $20,000 roof and a $20,000 multiplier that the attorneys took. And that's what you're talking about right now, that although the insurance paid out 40, the roofer got 20 because that's what the roof was. And then the litigation took the other 20. Is that kind of a on par argument?
Yeah, I mean that could be an example. The other thing you mentioned, roofs, and you mentioned, you know, hey, the whole neighborhood gets a new roof, and that's a battle the insurance companies are starting to fight, and these bills are going to deal with. Is, you know, roofs are pieces of the home that depreciate, they deteriorate. Eventually, in the state of Florida, we know that your roof is going to be needed to be replaced at some point.
Yep.
So the fight is, you know, if your roof's at the end of its life, and now all of a sudden the insurance company is paying these waves of putting new roofs on, when in reality, a lot of them are just older roofs that were going to go bad, whether it was a hailstorm or a hurricane, or whether it was just wear and tear, but they're at the end of their life. They're making the case that, you know, after a certain amount of time, there could be a schedule of actual cash value, meaning that, you know, if your room is 16, 17 years old, we should not pay the same amount that if your roof was 3, 4 years old and something came. Does that make sense? So there's a little bit of common sense there on both sides.
Well, it reminds me of car insurance, right? You get a brand new car off the lot and it's totaled, they're going to give you that $40,000 brand new car. But if you drive a 15-year-old, you know, Accord that's worth $4,000, they don't replace it with a 2022 Accord. They're going to give you, okay, here's $4,000, do with it what you want. So that's kind of what you're arguing. If you had a $20,000 roof and it's 15 years old and there's 5 years left, arguably, we'll give you $5,000 towards the new roof, but you've already used the first 15 years. Is that where they're trying to change a little bit?
It is. And look, the other side of that is we know, you know, most people do not have the money to pay a big deductible or to replace their roof. And whether you say they should or they shouldn't, but that's the fight from the consumers to say, look, you know, if X happens, how many customers really can come out of pocket and fix their roofs? And now you're dealing with an entire marketplace that has older roofs that, you know, have not been updated. And so that's the other battle. But there's got to be somewhere in between that after a certain amount of age, you start to plan for a new roof, and an insurance company says, hey, instead of paying 20, we'll probably pay 8, 9, 10. And that seems reasonable, you know, in its practice. It's just whether you can execute.
Except now I'm calling 1-800-LAWYER and lawyer says, I'll get you 12. And I get 12, so it's better than 8. Yet he's now charging an extra 30, and the roofing company would have been better off just paying for the whole new roof.
Yeah.
Than doing that. So
insert Hunger Games.
I see, insert the Hunger Games. I see the conflict there. We're going to jump in, and Heather Hurry, you're on here, so we're going to bring in some pillar to post 4-point inspection. So feel free to jump in, because she says there's clearly life expectancy of roofs, and she did mention another reason for shortage of inventory is lumber is 2.5 times the cost as it was a year and a half ago. So that's like the other element of Hunger Games is, hey, by the way, we know inventory is low, and insurance is tight, and lawsuits are rampant. We're going to go ahead and 2.5 times all of your building cost and materials. So it's fun times right now. As a buyer or seller, here's going to be the advice I heard from the first half of the show. If you are an owner, take a look at your big ticket items and start doing a sinking cost and start planning and budgeting. Have a reserves for your house and a sinking cost. And if you know the roof's going to cost you, we'll use 20 grand as that number, or 15 grand. And in 5 years, you've got to replace it. then let's start budgeting $4,000 per year or $350 per month so that you're not going to be caught. Hey, and if a storm comes in and you are legit eligible for a new roof because you're legit eligible, that's what we pay insurance for.
No doubt.
And I've been there and I've said it myself. I ended up paying a new roof out of pocket myself. Yet when I bought my house, it was 16 years old. And I said it to you, Taylor. I was like, well, it's good for a couple of years and maybe we'll have a hailstorm, right? And I was kind of, come on, hail. And we had a hailstorm last week in Orlando. And I got the call on my rental home and said, you had hail in your rental home. Called my tenant up. She says, there's no damage. There's nothing. It's only an 8-year-old roof. It's fine. But yeah, and she says smart advice for big ticket items. You've got to be able to budget. You got to be able to maintain it. Go ahead.
Well, I want to say just take a roof, for example, right? If you're somebody that is going to invest money into their current property, if you show a property, don't you believe that they're going to get that out? I mean, like if you're representing a buyer and you go see a property and it's got a brand new roof, and then you go see a property that's got a 16, 17-year-old roof, you're going to look at that property and go, the new roof you're worth paying more than that. Your insurance is going to be less, which your monthly cost, and you're not going to have to touch it for whatever, 10, 15 years. So seems like you'll get it out.
It's a win-win-win. And then we'll add another element is the appraisers don't give you full evaluation. You give me a 20-year-old roof, I'm going to give you an appraised value of $250. I put a brand new roof on there, maybe $255.
Right.
So you immediately lose money because an appraiser says, you have a roof, does it leak? No. Cool. Next question. And so there's that balance right now that, buyers are willing to pay above market value. Appraisers are going not so fast. And so that new roof becomes another challenge and problem. So it really is important, when we are looking out there navigating buyers and sellers and negotiations, that we know what we're doing. Cool. Richard McKay, you jumped on here as well. I love it because we're going to pull up your 4-point inspection here real quick. Donna Fiore from Teuton Home Buyers Warranty also mentions her warranty will cover up to $1,000 on a leak to normal wear and tear. So sometimes roofs will have normal wear and tear. And if that's the case, $1,000, they'll write you a check to get somebody up there and patch and replace that. So that's good to know. All right, man, let's talk about a 4-point, because as owners are thinking about selling or buyers are buying, the 4-point is a key document for you guys as you look to see if they're eligible, correct?
Yeah, it's the number one inspection that determines eligibility for all these different companies.
If you're seeing this live online, this is a 4-point inspection from Pillar Post Jeff Mackey team. So thank you guys for doing that. And I will say, as a buyer, insurance companies cannot unsee what you show them, and they cannot unhear what you tell them. Send them the 4-point. Do not send them the entire inspection report.
Yep.
The entire inspection report says every nook and cranny that's wrong, and as soon as a insurance company knows it, they can't unsee it, and there could be some things that make you ineligible. The 4-point is the one sheet of paper that they need to be able to tell you, how are we doing for this? So as we look at this, photo requirements, they get a picture of the house on each side, the roof, the plumbing that you have under the cabinets, plumbing drains, the electrical panel, electrical box, and any specific hazards. So let's talk electrical system real quick. What are some deal breakers for you in terms of electrical in a home? And I guess we can see it right here, but go ahead.
Yeah, I mean, you mentioned it, cloth wiring. That's an older school wiring that if that comes up, there's not many I think only Citizens will take it, and it requires an approval. It's a whole deal. We've talked about aluminum wiring on this show. That's aluminum wiring that's not going, into the major appliances. That's throughout the walls. Copper is king, I guess, for lack of a better term. If you see a lot of copper, then you're usually in a good place. Then obviously there's different panels that are frowned upon, and there's one of the main ones is Federal Pacific. You have, I think it's Zensco, Challenger. There's a couple of these panels that over the last 2 decades have been deemed, unsafe. Maybe they have problems tripping, or problems, and they just throughout the insurance world have been more likely to cause a fire. And the insurance company is a very follow suit deal. So when something happens, they kind of follow that, and that panel becomes bad.
Yeah, so you mentioned Sylvania Zimsky, the Challenger, the Federal Pacific, to replace one of those panels anywhere from $900 to $1,500, depending on who, what, when, where. So there you can budget for that. To rewire a house, copper, how do you know it? It looks like copper. It looks like a penny, the color of a penny. If you open up your panel and you see silver going into your breakers, that's aluminum wiring. If you see what looks like a penny or copper going in there, then you've got copper wiring. Cloth literally looks like it's got cloth. You can see it's got cloth and paper behind it. Oftentimes it's two strand, which is the old school. You don't have a ground there, which becomes then a hazard. So there you go for electrical. And you're saying it's okay if you have aluminum because there's some checks here that say Alumicon or some details of remediation can be done. So aluminum's not bad. There's a fix. However, we're still dropping a lot of the carriers because some carriers are going copper or don't talk to me, right? That's deal or
Sure.
no deal. Okay.
Yeah, and that's the annoying part about insurance companies right now, by the way, is the boxes are now smaller. And if it doesn't fit into the box, they don't want to hear it. So good point.
And they don't have to because 4,200 homes sold last month, which is 20% higher than the next best month. They're going, no, we don't want yours. We'll go take the 4 others that are in line that have little to no potential risk. I'd be curious of the claims, how they're broken up. Do you guys have that data? Of the 8% of claims, how much are roof versus water versus pipes versus electrical? Do you have that?
Yeah, it's water, I think, far and away leads the deal. All kinds of water damage for sure is the most common claim.
That could be busted pipe or roof or
Yeah.
they're not doing negligence. I mean, if you just leave your bathtub on with a washcloth on it, they're not doing that, right?
Right.
That's negligence. Yeah.
Yeah,
Don't
yeah.
be dumb. Yeah.
Be doing that.
Don't be doing that. Okay, so moving on to 4 point, the HVAC. We've got to make sure a house has heat because you need heat to survive. In Florida, it could be argued you need air conditioning to survive. Yet you can have some fans and still there. So tell me about HVAC and 4 point. What part does it play?
Yeah, and I mentioned that. I can't remember the last time that HVAC has killed a deal. Mainly, it's just good working order. Make sure there's no red flags. That it's heating and cooling. But it's certainly not one of those things that's a hot point.
Yeah, and this is a good point because when I look on it, this one says, does it blow hot and cold air? Is it centraled? Yes, it works. It's a 24-year-old system, yet it worked. Now that's where insurance says, hey, if it's blowing cold and hot air, I'm fine. And you might want to pick up the phone to Donna Fiore at 210 Home Warranty and say, I've got a 24-year-old AC that's in working condition. I also know any given day it'll stop being in working condition. So that's where you can almost hedge that bet as well. Of going, it's not going to be an insurance claim, but it could be a warranty claim because they will warranty stuff that currently works in the future if it doesn't. Plumbing's been fun, and this is one of the, we mentioned PEX piping. At the end of the day, we can just agree polybutylene is one of those deal killers. If it's mainly poly, they're not going to even touch it. Agreed? Still the case.
Yep, I would say just less than 5% of companies are even going to entertain it.
Okay, so we can get it, but you're paying for it and you're through that.
Yep.
Copper piping with older homes is common, and the lifespan of copper, we're told, is about 50 years. Do insurance companies, number one, is all copper good? Copper's king, just like in wiring? Or are they looking at how old is the house with the copper as well?
I don't think it's inherently copper is still fine. There's other age guidelines that affect it, but there's not that I'm aware of that they're getting that nitty gritty with their data. But making sure that the copper's in good working order, it's without leaks and so on and so forth. And I'd be curious to Heather that's on here too is just CPVC and PVC seems to be very welcomed as of late. A lot of the newer plumbing is CPVC or PVC. By the way, say that 10 times in a row. So
yeah.
So yeah, mainly the problems come from the PEX that's older than 2010 and the poly is what we deal with.
Okay, so PEX is a little more of a bendable material. It's common, it's thinner. So CPVC is when you go down the Home Depot aisle, it's the PVC pipes, right? It's the thicker, white-ish, a little bit off-white plastic. PEX is going to be a thinner pipe. You'll see it now as being bright blue, bright red to show you water, cold and hot, and then white for the intake. What we learned is now if you have PEX older than 10 years, it's as bad as poly is. Is that right?
Yeah. Yep. And it's the same kind of reasons as far as just kind of the start, finding class action, a lot of claims. All of a sudden they've found it to be faulty in the materials. And so that becomes older PEX is treated almost exactly the same.
So that's a good point. When we're an insurance company now and we're going, hey, insurance team, what were our claims last month or last quarter? And they go, whoa, old PEX is on the rise, time out. Let's just stop taking on this because we need to minimize our claims. And that's how they're deciding if they're going to take it or not. If all of a sudden they need more business, they might be a little more loose because they've got room for more, taking on more risk. But that's what you're saying is they're seeing a pattern, therefore they shut it down.
Correct. And it's
Okay.
it's lagging information too. And that's part of the problem is that insurance companies move slow. They now seek damage and then they try to do it a couple years later and then they just say no to it. And
Yep.
so I don't know how effective that is as an industry, but yes, that is the seemingly way it works as far as underwriting and claims data.
Yeah, and so when we look at this, we're just checking copper. Now this one you can see has CPVC, but sometimes it's a mixture. And we talked about this, and I've got a house right now, and the main house is copper. Yet at each sub out, so from wall to sink, it's got CPVC, or it's got PEX, or it's got poly. At the end of the day, are you guys looking at any pipe in there, or what is the main artery system of the house?
Yeah, you remember you said, hey, you don't send the whole insurance inspector or the home inspection to the insurance company. It's whatever's on that 4-point in reality. I mean, right? If that comes up and they see any piece of poly or they see any piece of old PEX, now we have to deal with it regardless of how easy it is to replace. A lot of it's really easy to replace, but now you have to show that you replaced it by a licensed plumber and so on and so forth. So
Yep.
it creates that kind of thing. So yeah, regardless of whether it's 6 inches or 6 feet, if it's noted on the 4-point inspection or it's a part of it, then yes, we have to deal with it the same way.
Yep. Well, and I've got a condo right now we're listing, and it's a copper condo. And at the water heater, about this big, goes from copper to poly to the intake valve. And so now we've got to get a plumber in there to replace that 4-inch piece of polybutylene because it showed up in the inspection report.
Yeah.
So at the end of the day, it's good because we're going to improve it and have less claims. And no one wants to get a claim in the house when something pops. We don't want to deal with that. The roof, you already mentioned, 12 to 13 years is the new old. Even though when the roofer sells it to us, it's a 20 to 25-year roof. Insurance
It's lifetime.
Yeah, it's so insurance is I don't care. Really, if you're at 15 years or older, you're going to be paying a higher premium because of that. Fair statement?
Yeah, no question.
And now you're saying 12 years and older. So is it under 10 years? You're pretty much does 3 years or 9 years? Does that matter for you guys? Or are you going you're under 10, you're fine?
I was on a phone call with a rep today, just right before we hopped on, and he said for them, if it's 3-tab shingle, which you don't see often, but it does exist, that they'll only go back 7 years, and the architectural shingle, they'll go back 10 years. So you can see how tight that is, right? It's borderline ridiculous. So I would say anything after 10, even if it's architectural, you just have some companies that start bowing out, and it just depends on whether those companies happen to be the the price favorable type deal.
Well, and I mentioned I bought my house in 2019 with a 16-year-old roof, and last year I put on a brand new roof. First thing I did was call you guys. I'm like, hey, brand new roof, give me that new quote. And in 13 months, because the insurance Hunger Games was already in play, your next best quote was worse than my existing one I got a year prior with a 16-year-old roof. So
yeah, it's unfortunate.
As an existing homeowner, everyone who says, I'm not selling, I'm watching the show, but I'm learning about what I need to maintain. What risk do they have of just being dropped or getting a rate change based on, I guess, how often are underwriters or insurance companies auditing and reevaluating their current policies based on age?
More often than ever. It's the hardest market I've ever seen. I mean, I've only been doing this for 10 years, but I know, there's people that are mentors of mine that have been doing it for decades, and everyone agrees that this is probably the hardest market they've ever seen, specifically from an underwriting standpoint, meaning, it might not even have to do with your personal house. It might just have to be the zip code that you live in. An insurance company sees a high claims frequency, and they have the ability that they go, hey, you know what, we're going to non-renew all of these type of houses in this zip code. And now when you're non-renewed, you're forced back into the free market. When you're forced back into the free market, your water heater that was 16 years old, you weren't dealing with because you had insurance that was in place, but now you're dealing with it, right? So that's kind of what we're seeing. It's a very high risk for homeowners that they get non-renewed or they have to deal with that, whether it's their particular house or not.
So the grandfather in, you might get away with it for a couple of years beyond what you would have, but it sounds like their scrutiny is coming on. They're auditing because at the end of the day, they are looking to protect themselves of going, you're no longer, which kind of stinks for the consumer. I'd be like, I've been paying you insurance for 16 years with 0 claims, and all of a sudden I'm high risk, so you drop me. That doesn't seem fair either, yet that is the world that we're living in right now. Hey, this was good. Go ahead. Final thoughts?
No, you hit it on the head.
Yeah. Any questions out there, comments? I appreciate the interaction with Heather and Donna. Everyone else has jumped in. Always great. And if you want to share this, then please share it with someone who needs to hear this. And frankly, if you live in a home or you intend to live in a home and own it, you need to hear this information because this will affect you big time. Taylor, always a pleasure for you jumping on, and we'll see you next time we come through here. And next week, we intend to have an attorney talking about quitclaim deeds, talking about title insurance and what it's really done when we look at title. And then I'm excited because I'm going to do a series on hold. I'm going to do a whole workshop and go through this book. It's going to be like a book club, and we're going to go through chapter by chapter and talk about exactly what's needed to hold. Because as much as we say this real estate market is bananas right now, there's opportunity to invest because the trajectory says values will continue to go up. So if you watch now, we hope to have you watch again. Taylor, we'll see you next time. Everyone else, have a great day. Take care.